Two investors started SIP with the same amount. One invested in gold. The other invested in silver. So, what happened? The investor who chose gold saw a relatively stable portfolio. The growth was slow, but consistent and steady. On the other hand, the investor who chose silver experienced a lot of ups and downs. High volatility. But when the growth came, it was explosive. And honestly, this is the confusion most of us live with, right? Should we invest in gold or silver? If yes, how much should we invest? When should we invest? And when should we exit? In this video, I'm not just going to answer these questions. I'm going to give you a simple framework. A way of thinking. So that any time in your life you face this decision again, you'll know exactly how to choose between gold and silver. Today, we're going to talk in depth about the role of gold and silver in your investment portfolio. And you're watching InstaProfit Hacks. Pushpin: why gold and silver are important. Let's start with the most basic question. Do gold and silver really deserve a place in your portfolio? And if yes, why? Let's begin with bank fixed deposits or savings instruments. After taxes, they usually fail to beat inflation. So if your goal is to grow wealth, not just preserve it, FDs alone are not enough. Now let's talk about equities. Stock markets are affected by both domestic and global risks. Sometimes your country faces economic or political challenges. Other times, the entire world goes. Gold versus silver, what's the difference? Silver is deeply connected to the modern world. It's used in electric vehicles, solar panels, electronics, and industrial production. Because of this strong industrial demand, silver prices tend to move up and down a lot. That's why silver is more volatile. Gold, on the other hand, is much more stable. Central banks around the world hold gold as a hedge against currency fluctuations. Gold is considered a store of value. History has shown us again and again. During political crises, economic uncertainty, or major global disruptions, gold has helped people protect their wealth and rebuild their lives. Bar chart: how much should you invest? Simple rule. Here's a very simple rule of thumb. Backhand index pointing right: 100 minus your age equals equity allocation. The remaining portion of your portfolio can be allocated to other assets. Out of that remaining portion, around 50% can go into precious metals. And within precious metals, 2/3 in gold, 1/3 in silver. For most people in the 30 to 40 age group, this roughly translates to gold, 10 to 15%. Silver, 5 to 10%. Gold brings stability to your portfolio. Silver brings growth potential. Hourglass: not done when and how to invest. Trying to predict prices is usually a mistake. Especially with silver. A disciplined approach works best. Use SIPs. Invest consistently through gold ETFs. Silver ETFs. Stick to a monthly investment routine. Avoid getting trapped in gold-silver ratio predictions. They can be misleading and often lead to emotional decisions. Always remember, allocation is more important than prediction. Discipline is more powerful than excitement. End arrow ending. If you found this video logical and helpful, make sure to hit the like button. For more simple, real-world finance videos, subscribe to the channel and turn on the notification bell. This is InstaProfit Hacks. Take care and invest smart.